Who, me? I'm going to moderate.
Nadine?
Oh, you're
No,
moderating?
Wasn't Ben supposed to
I
moderate?
have to. No, I don't have anything to talk about.
Let's just wing it.
Okay.
Bob, I put Comstock Resources up in WSB. It's the best looking E&P chart I've seen in years. So take a look at that when you have a moment.
Yeah, I haven't looked at Comstock in a long time. I'll go. Jay Allison, I think he's still running the company. I'll have to go back and look.
It's the best looking chart in E&P, in my opinion.
Wow. All right.
There's nothing going on with services. Schlumberger looks like it wants to go to the center of the earth.
Oh, it does. The service names are in trouble. I mean, all these E&P companies, what they're talking about is these capital efficiency gains, dropping completion crews. I mean, EQT said it, Range Resources said it, look, we're running 2 rigs or 3 completion crews, and if we continue to drill wells faster and longer and all these other things, then we're going to drop a completion crew. So there's no uptick. There's no upside to the service names right now.
Yeah.
What'd you take on Shell, Bob? Pretty good quarter, huh?
On BP or Shell, yeah, I'm going to go back and re-listen to their Q&A yesterday, but all these companies have come in pretty well on, that was BP that came in yesterday.
Yeah, Shell was today.
Yeah, I got to go back and look at Shell, and C&Q was good. That was the one that we mentioned earlier this week. We thought was going to report a good quarter, and they came in and did very well here too. All the gas names are down today. People are worried about the weather and the gas prices here still. But anyway, I'm sorry, Biggs.
I mentioned this before, but check out the Borsa app, BORSA. You basically can listen to conference calls like a podcast. You can skip over the prepared text, go right to the Q&A, speed it up a little bit to make it faster. It sounds a little bit like Mickey Mouse, but the Borsa app I use for all the conference calls. It's fabulous.
Really? Interesting.
Yeah.
I'd like to ask our pre-show people, what do you prefer, music or no music in this little pre-show situation?
I kind of like some noise or music because it kind of then signals to people it's the pre-show and we're not in the real deal.
I like dog snoring.
Yes, I do too, but we don't. We don't have any dogs on the show today.
I do.
I think you might have a bark.
I've got one right here. Right here, I've got one.
Well, ladies, your dogs, but your dogs don't snore like Mackie.
Mine bark, which is,
Nadine, you have a King Charles also?
Is that a Cavalier?
I have King Charles, yes.
So why don't yours snore? Russell and Mackie's snores.
Because I have I have one that does, but he stays in the other room. He likes to stay there. He knows I can't have him snore. And then Zoe, who's my baby here, she is a doll. She doesn't make a peep.
Oh, good for Zoe.
Mm-hmm. Yes.
We do have Charlie. I'm just gonna get this all hooked up right now.
Oh, Charlie's joining us.
Charlie.
I'm in complete disarray.
Oh no, Charlie's joining us. Oh.
I'm in the dark.
You are. You sound like you are too. Did someone put you in the corner, Charlie?
I literally just moved out of my house. I mean, the movers were here yesterday, so I'm sitting in an empty room.
Where are you going?
I'm homeless.
Where are you? Where are you going? I know you're going somewhere. You're not going to just be homeless.
I'm going to spend the next 5.5 months visiting my kids. I have 5 kids all around the country.
So did you sell your house, or someone renting it, or what's going on?
I'm putting my money where my mouth is. I think there's going to be a big deflation in housing. So
good, because I sold my house last year, sitting on the cash.
But Charlie, you got to have some place to bury all that gold you've got. You can't bury it in your backyard. You can build your house.
I do have a place up in.
And the bodies, Bob, and the bodies.
I have one last home up in Canada on Grand Lake in New Brunswick, but I've sold 2 homes.
Nice. Wow, look at that, Charlie.
One last one. And Canada, where I keep my gold, they can't. If the U.S. confiscates gold, they can't take it away from me in Canada.
That's true. That's true.
Ready to rock, gang?
Are we live yet?
Yes.
We're live.
Is anyone dressing up for Halloween?
I think we're live, Bernie.
No?
That's the most
Oh, we're
important
starting.
part.
We're starting.
Yeah.
Okay, sorry about that. Well, okay, we're going. Hello and welcome to the Beats Roundtable. I'm Berna Barchet. Today is Tuesday, October 31st. As I mentioned, it's Halloween. Happy Halloween. Our group is here ready to talk the markets and their best investment ideas. So with us today, we've got our energy guru. Bob Morris is going to update us on earnings of one of his favorite nat gas names. Our technical analyst, Kevin Baker, is here. He's got a Bitcoin-related trade to talk about. Charlie Peabody is here. Our housing bear, who just informed us that he sold both of his houses. So we'll see what he has for us today. And Nadine Terman has logged in and is going to just weigh in and keep us honest and maybe surprise us with a thought or two. So let's get started. Bob.
Thanks and good morning.
What you got?
EQT, we had Range Resources report last week and we talked about them. And today I want to just follow up on EQT. And the reason being is that Range, EQT, Intero, and Extend, which is the former Chesapeake, are my favorite natural gas names, with EQT being my favorite pure play E&P natural gas name. I say pure play, but because they all do have some liquids production, but as far as being focused on natural gas, that's my favorite name. Now, I haven't bought any of the gas names here. Am I being too cute or waiting too long? I don't think so, but I'm watching them here. All the gas names are down today just because biggest factor near term is the winter weather. And it's warm here in the Northeast, and that's weighing heavily still on the natural gas names as tomorrow we go into November. And so, but what's important about EQT and hitting on the themes that we said we were going to witness here again in the third quarter, the two big things is they beat on the quarter really on two factors. One, continued operational efficiency gains and improved well performance. And two, lower than anticipated natural gas price-related production curtailments. And both of these factors contributed to a nice bump up in their fourth quarter guidance. In fact, if you look nearly, the fourth quarter guidance is up 8% from their prior guidance, strictly due to the fact that they're no longer curtailing the 40 BCF production they had planned on curtailing before. The reason being is natural gas prices are up here well above $2. And so several weeks ago, they turned that curtailed production back online. So the fourth quarter numbers are going to be better than what they previously guided to. Importantly, what they said is that the $2 level is the level that they look to either turn on or turn off that curtailed production. That's production that already exists from existing wells that they can turn on and off very easily. And we're at 275 on natural gas prices today. So that production near term is going to stay online here. They still plan to keep pro forma production flat next year. That's important just because of the capital discipline in companies trying to keep market in balance without letting production decline. They're saying, look, we're just going to keep production flat. But what's important here too is they were the first company to really quantify and confirm what we've said all along in prior notes, is that for these pure play natural gas names, it's at up to $3 that they'll bring this curtailed production online. In other words, wells that they can turn on and off easily. And that's what they did. We said before that it's $3 to $3.50 that they'll complete DUCs or drilled but uncompleted wells or other inventory production they'll bring online. And they said, yeah, that's when you'll see those DUCs completed and come back online. Interestingly, Intero reported yesterday after market close, and they said, yeah, we're still deferring one, and we're going to defer another pad of drilled but uncompleted wells here into next year until we see gas prices better. Again, that $3 to $3.50. So the companies are confirming what we laid out before in the fundamentals for natural gas prices here. The other thing too is these companies, the pure gas names, as I mentioned with Range last week, they still have some liquids production, 30% plus or minus their production that comes out with the natural gas, so they can't produce them separately. is liquids, and that's really where they're making all their money is on the liquids and the hedging. Right now, EQT has hedged 60% of the production for next year with a floor of 3.25. So that's sort of supporting the numbers, the top line revenue and the bottom line earnings that we see from this company. So that's my favorite gas name. I haven't bought any of them yet here just because I'm still waiting, watching the long term fundamentals, which are very strong. But more importantly, near term, the winter weather, because that's going to be the key factor on natural gas prices through the winter and going into early next year. But our preferred pecking order still hasn't changed: EQT, Antero, Range, and then extend the former Chesapeake.
So what is it going to take? I know that it's been a very consistent theme for you, the oil names over the nat gas names. It's going to be 79 degrees in New York today, which is a little weird for October 31st. But other than cold weather eventually coming, what will it take for you to get more constructive on these gas names? Because you clearly have the ones that you want to buy.
Yeah.
Are you looking for lower prices, higher temperatures? What else is going to get you to pull the trigger?
If we get a lot further dip, then I'm probably going to be itching to start adding to the names. But I like the long-term fundamentals. The thing is, the new LNG export capacity, the big uptick in data center demand is going to come toward the latter part of next year. So at some point, I do want to own these names. It's just that we had a record warm winter last year. We got this huge storage overhang going into this winter, and we get another normal or warm winter. That's not going to help. And nobody can predict the weather. That's why, I worry I'm being too cute here and waiting to buy these names. So right now, with where things are, I'm just waiting and watching. Again, long-term fundamentals are very, very strong with the demand we're going to see from these data centers, with these coal plant shutdowns, and with the new LNG export terminals. You're looking at significant uptick in natural gas demand over the next 5 years. And we want to own these names at some point. But again, near term, it's just this whole weather issue and the storage overhang that we still have from last winter.
Hey, Bob, I'll watch this for you, but I'm circling right now.
So
EQT. Sorry?
Go ahead, Banks.
If the 50-day crosses through the 200, which you have this gap here, this is a pretty promising chart. But I'll let you know and our subscribers know when EQT takes the 50-day takes the 200-day out to the upside. That's a really good confirming buy signal, coupled with this volume pickup that you see here.
No, that'd be great. That's a good signal to keep an eye on, especially with not being able to predict the winter weather and knowing that we want to eventually own these names.
Gotcha.
Yeah, as a contrarian and a value player, I think energy is the only value in the market right now. I will tell you, I feel very strongly and have positioned it accordingly. We're going to have a very rough November in the markets.
Yeah.
That's bold there, Charlie. That's bold. Is it
money
about
in my mouth.
valuations or elections, or what is it? Is it the because of the banks and they're going to have to come clean? What is the driver of that prediction?
Again,
key prediction.
It's my spider tingly feelings that I had last August, going, where we had that mini sort of correction of 8 or 9%. The positioning, the mechanics are setting up for some kind of very quick, severe correction here in November.
I only asked because I actually just got a notification, our longbow trade signals, and I know not everybody knows about it, but basically we have some momentum signals, and the SPY just cut through the short-term momentum signal, so that when you're going from good to worse, that's not a good thing on those types of signals. You have to be a little bit more careful. So I found it interesting from a technical standpoint. I did get a flag this morning too, Charlie. So I was more curious if you had a thesis or what.
You don't, from what I'm talking, when I listen to the banks and some of the traders on the desk there, you don't have a lot of protection below 5,700. So if we slice through 5,700, it's going to be very quick to the downside.
The other way, I think, something interesting I was writing, and I do a free newsletter in the morning. So this isn't like a promotion where you have to pay. It's the Longbow Arrows. But basically, like, yields are rising based on the Trump's odds increase. And you've got, obviously, gold's been up. You also have when you're, so many things betting on a one-way trade. Another way your prediction comes to fruition is if, and this isn't a political statement, this is just a positioning statement. If obviously something doesn't come to fruition, people are going to have to reverse their positioning. I'm looking at that, and also the dollar's 1 week implied volatility at a 2-year high ahead of the election. With the dollar being up, you've got a lot of one-way trades going on right now.
Yeah,
I'm
and
also, there's also another scenario I think that you have to worry about. It's just like, if obviously like the opposite scenario of where everyone's positioned, but just also no answer, or a lot of discord. I mean, I'm concerned about that as a negative catalyst in
Sure,
November. Either that we're
delay, right?
waiting
Confusion and
a
delay.
week
It's
or
never
two, or that things are in the courts. I mean, it wasn't a great period in 2000 when they had to go to the Supreme Court to settle the election. I don't think anyone wants to see that because the markets hate uncertainty. So
I think that's the biggest risk. I think unless there's a clear cut winner, either way, it could get messy. Both sides are lawyered up to challenge anything that looks suspicious or close or anything like that. Um, I think the markets are only settled if we have a clear cut winner. Otherwise, things could get a little choppy, uncertain, and messy.
yeah.
The season will become very positive. This is the most wonderful time of the year for humanity and for stocks. And November, December, January, as Yale Hirsch will tell us, and J.C. Peretz, our good friend, shared with us, the seasonals were supposed to be down in September and October, and we weren't. So it really connotes underlying strength.
Yeah, I mean, Bakes, I think if we do get the kind of correction I think we're going to get in November, it's to be bought, but it's going to shake a lot of nerves. I think that, Nadine, you mentioned, the gold. I've actually been selling upside calls against my gold positions. I mentioned a couple of weeks ago, that I'd heard some of the big silver miners were selling forward some of their production in the 35, 37 area. So I've been expecting a correction here into November on a lot of fronts, not just general stocks, but even precious metals, which have been a big holding of mine.
Sure.
Charlie, did you have anything else that you wanted to talk about today, or was there?
I'm sort of playing catch up here, continuing with the theme that things that need to be financed are going to disappoint. And by things, I keep talking about houses, cars, boats, RVs, etc. And disappoint, I mean that affordability is still a problem, and either you're going to miss your unit sales volumes numbers, or you're going to have to see gross margins come in. And so today I just wanted to catch up on housing, because yesterday we had the pending home sales index rise, and you can see from the chart, it was a pretty nice rise month over month, but in the grand scheme of things, home sales are still near all-time lows. We're running about 4 million homes this year. That index is at, lows that we've seen over the last 15 years. So if you're a bull, you would say we have nowhere to go but up, given the household formation. If you're a bear, you'd say that affordability is still a problem, and the only way that home builders are going to be able to sell new homes is by offering incentives such as mortgage buy downs. So 2 days ago, we had DR Horton that reported disappointing results. They missed on orders, they missed on closings, they guided down on deliveries for next year. And they acknowledge that they have to offer more, discounts or incentives to support demand. And that's been a fairly common theme throughout this third quarter reporting season by the home builders. Orders and backlogs quarter over quarter have declined pretty much at all the home builders. We have 3 home builders yet to report. LGI Homes on November 5th. These are homes on November 13th, and Toll Brothers on December 3rd. And I think we're going to continue to see disappointment. So have been and continue to be a seller of home builders. I just don't see the upside, given where these things are trading at over, close to 2 times book, and the pressure that they're going to feel on their gross margins.
I'm curious. Have you seen any bifurcation in the market of like high-end homes. You mentioned Toll, and I was curious if whether or not, they tend to be sort of at the top of the price range of the public home builders. And I know that in a lot of other consumer categories, we've seen strength at the top of the price deck hold in, sort of this K economy concept that we've talked about a lot, where lower and middle income are really getting hit by inflation rates, whereas upper income, higher net worth have not been as affected. So, are you seeing any skew? Because like in cars, the Ferraris are all still being bought. I mean, Toll is not a Ferrari, but it is higher end. So.
Yeah, no, I mean, Toll Brothers last quarter had one of the better reports. So in that sense, you were definitely seeing some, Lennar showed some weakness in September when they reported. Toll showed some strength. So you are seeing that, bifurcation as you alluded to there. I think it's starting to, normalize. In other words, you're seeing weakness across the spectrum, is what I'm sensing from what I've heard from various agents. I can tell you, I just sold a multi-million-dollar home in the Northeast, and I had to take a below asking price for it. There's a plot of land literally right behind my house that's 17 acres of undeveloped land that was bought by a hedge fund, developed. It's been in a year and not a single lot has been bought. And these are, again, multi-million-dollar homes that are supposed to be put up on this. So the weakness is starting to show up as far as I'm concerned here in the Northeast on the high end. I mean,
It sounds like you put your money where your mouth is on the housing. So
I clearly have. I clearly have. I mean, listen, I'm a big believer there's going to be deflation in home prices. I also want to reiterate that I think the banks have been very conservative in their underwriting. It's not going to be a problem for banks. They're doing 60% LTVs. They're still getting recoveries on foreclosed homes because of the appreciation. But I will point out, affordability remains at all-time lows. I was just looking at some delinquency data. I don't know, actually, Jen, I don't know if you have it, but the mortgage rate, we had, going back to that pending home sales data that I showed, we had a big jump here for September. These are September contracts that have been signed, but it takes about 6 weeks to close. So in September, you had that big drop in mortgage rates down to 6.1%. And that's what created this big jump in the US pending home sales data. But now we're at 7%. And so the October pending home sales index, I think, drops back down to that 70 level, that all-time low. In the meantime, what we're seeing is, because affordability remains at all-time lows, in the meantime, we're also seeing the residential mortgage loans that are 30 days delinquent rise to 2.3%. That's the highest in the past decade. So we are starting to see some pressure in terms of delinquencies in this area as affordability becomes a problem. So a lot of the people that bought homes in the pandemic, I think, are really suffering right now.
Hey, Charlie, is there any pace of the Fed cutting rates that would sort of help that situation? Or, if we all of a sudden in the next 6 months cut 100, 150 basis points, is that enough to maybe sort of stop the bleeding?
This is the big debate. And starting in August, I started this theme of, things that need to be financed are going to disappoint. And the whole theory was you had 200 basis points of rate cuts built into the forward curve. So Fed funds is going from 5.5 to 3.5 at least. And then you add 25 to 50 basis points from Fed funds to get your 2-year rate. So let's say, 3.75 to 4% for the 2-year. And then you add 100 basis points above that to get your 10-year rate. So you're talking about a 5% treasury rate. And then you price your mortgage off of that. So I don't see mortgage rates coming down, below 7% for any sustained period of time. So no, I think right now a Fed rate cut of continuous Fed rate cut would work against the long end, because I think the inflation fears are going to come back next year. So I do want to be careful. I'm an analyst. You guys are all portfolio managers. My job is to get the fundamental themes correct. Your job is to figure out the timing and the pricing as to when to employ my analysis. I started building this theme in August and got a lot of pushback from people like Russell Young. I remember debating him on over service, the LDR. But if you take a look at all of these names, they have just crashed in the last couple of weeks.
Mm-hmm. Well, since we're on the topic of having discipline around selling, I think Bakes has some thoughts to share with us on a Bitcoin related trade.
Okay, real quick, I want to go through Charlie's chart here. This is the IHB, and I'm with Charlie on this. This big volume breakdown that you see here is indicative. I'm sure that's DR Horton being the culprit. The XHB looks very similar. The S&P. This gap down is a negative, in my opinion. I think this 120 level, 120, 130 becomes a lid. And I don't think you make much money here. I don't know how excited I am about a short. We'll see how the rally or the bounce continues. But that's what I see in the IHB right now. But then I'd like to go to Bitcoin. Jen, can you stop this chart and then I can go to Bitcoin? All right, I'm just going to change it up. All right, here is. Sorry, folks.
That looks like construction index. You know what? While you're sorting out the charts, I just might, add on the rate structure, and here I'm talking like a trader. 430 on the 10-year yield. Some technicians will say is a little bit of resistance. So you're going to have to do some backing and filling here. And so if we get a little bit of a rally in the 10-year here, it could support the home builders, but not if the markets are going south in November, as I fear. Anyway, sorry, Kevin.
Charlie, I got one more question for you on the housing, because, while we're here to talk about stocks, I think a lot of most people own stocks also own a house. When you talk about a correction, are you looking for 20%, 10%, 30%? Obviously, all real estate markets are very local, and it's gonna vary a lot. Sun Belt versus Northeast versus California, etc. But in general, what order of magnitude are you looking for in that housing deflation?
I have to be honest, I'm leery of putting a number on it, but it's going to be a double-digit type of decline in my mind. It is not going to be across the board as we saw in 2008. I really think there's a very different correction here. So it may be in second homes, it may be in Florida and Texas, it may be in inflated cities like Denver, Seattle. But my real concern has been not that this is going to be a problem for the banking system. I really don't believe it will be. It's going to be a negative wealth effect on the consumer and affect the consumer's willingness to spend. And so that's where I see it impacting. And the desire to invest in a deflating asset is going to go away. And so a lot of these, we've seen, Mohawk, Masco, Builder Source, Beacon Roofing, Owens Corning. We've seen all of these guys start to, warn against, they call it temporary weakness. But I think it's not temporary. I think it's a multi-year deflation process that we're facing. Sorry.
So maybe nothing as dramatic as what we saw in markets like Vegas or something in 2008, but more just like a slow grind down, and you don't have,
exactly.
But it's not, with rates where they are, it's not like people have been using their home equity as a cash machine like they did in the last housing correction. So is it more of a psychological effect this time as opposed to like a hard dollar, I can't pull money out anymore?
I think it is. I think it's more of a negative wealth effect than it is, massive repossessions and foreclosures.
Mm-hmm. Okay, sorry, Bakes, we interrupted you. I'm going to kick it back to you with.
No, I appreciate that very much, and sorry for the delay. This is bottom line is that if I didn't. I showed the internally the Bitcoin chart itself. This is the Grayscale Bitcoin Trust GBTC. So internally for subscribers, they can see the Bitcoin chart. And to cut to the chase, we tested 73,157 a couple of times 2 days ago, and that is the March 13th 24 high. And if we take that out, it suggests $100,000 for Bitcoin. And I know that sounds extreme, but it's just simply measuring the prior base and projecting that forward. There's no guarantee of that, but that's what the price actually looks like to me. I've participated in this through the Grayscale Bitcoin Trust. And I want to highlight my sell discipline as well. This is the buy in June of last year. That worked out obviously very, very nicely. We're up 195% so far in this trade, and I mean so far. I've got another rule that if I double my money in less than a year, I take the original investment off the table. So this is a double, and I sold it about 9 months in, and now I'm playing with the house money. Here, the first part of so it's about, I basically went from 10% of the portfolio to 20% of the portfolio. Here is my sell discipline in action, at least the first third. Anytime I have a winner, and it closes below the 200-day moving average, I sell a third. I don't talk to anybody. I don't doubt myself. I just sell a third. Period. End of discussion. Because sometimes things reverse to the upside. I don't sell the whole thing. And here's this level right now, 58.51. If it closes above this, I think I've got $75 on my hands, similar to the Bitcoin analog that I used before. So that's what I see going on with Bitcoin / Grayscale Bitcoin Trust, and I'm letting my winners run.
Hey, Charlie, I'm curious your thoughts on whether or not Bitcoin is a risk asset or a risk on or risk off, or Nadine, either of you, because I think that it's sort of been marketed as as a hedge to the financial system, and supposed to be a gold type, risk off beneficiary. But in the last couple of pullbacks, we've seen it perform very much like a risk asset. So I'm throwing it out to everybody. I guess I'm going to Charlie is our financial guy, and Nadine is a macro specialist. Thoughts on that?
All I'm going to say is I see it as a risk asset, but I'll throw it over to Nadine. She knows better than I do.
It's definitely a risk asset. If something can go down by 70%, that's a risk asset. That's not so, but you can trade it, right? I think that's the point of it. But what I'm going to give to you, Berna, I know I jumped on the show late on behalf of my colleagues here. But one of the things I'm going to do, I'm going to give you my entire screen. Beautiful here. Jen, I don't know if you can pull that up here. I'm going to pull that up. I'm sharing my screen.
Yeah.
She might be doing it. But anyways, once Jen gets up there, I was just going to show some of the signals, because I know obviously we're having a weekday because of tech today, and I'm sure that the team's going to go a bit into it. Microsoft obviously had to slow down in its business given capacity constraints. Its capital spend for a single quarter now, let's just put this in perspective, is greater than its annual expenses, right? Greater than its annual expenses, thanks, Jen, that were till 2020. So let's put that in perspective of why we're down today. It's because there's a lot baked into that, and now they're saying they're going to be spending more, as well as Meta. But one of the things I wanted to mention, we can go back to Bitcoin here, is this. Just look at the SPY. This is the longbow. This is actually the old dashboard. I do keep it for myself. But you've got an oversold signal. I want to put that in the context of what Charlie's saying, because Charlie's saying be careful, right? And so when you look at him looking at the financials and some things that he's looking at versus some of the technicals, I mentioned here that we got a breakdown in momentum signal, and I'll show that to you through it, because otherwise you might take a look at this and say, oh, it's bullish, pretty good, oversold, I want to get it. It's got odds roughly 2-1 to the upside, but you had to break a momentum. And I think that's where you have to be careful. And I think it's picking up on what Charlie's putting down here. And that is, you've got a situation here where, yes, it's moving through the trading signal. But if we go to the momentum indicator and we look at this, it's now breaking down through this yellow line, and it's just hitting a more bearish situation. So it's breaking the bullish. It'll probably turn neutral tomorrow, and therefore you don't want to be picking up, like doing buys the dips when you're seeing momentum break down a little bit. Obviously, also one of the things I like to look at is implied volatility. Is it at a premium or a discount? And right now, I don't know, I guess you can't see fully my screen, but I'll try to bring it over here. It's red, it's a discount. And so that's telling me is that, the 1 day is minus 58%. That's pretty significant, is that people are not paying up for protection. And so, per Charlie's point of talking to PBs and other folks about where everybody's positioned, they're not positioned with a ton of protection. So I would be a little bit more careful if you're looking to overall be trying to trade this market. Kind of a similar thing on the Qs, right? I'm getting an oversold signal. You'd say, okay, great, odds over 3-1 to be buying into this dip. But we also got a crack in that short-term bullish signal here. And so if I pull up the Qs, the trading range might be on a low of 489 to a high of 503. So you're looking at, not much of a downside and 3+% upside. But again, I'm a little bit concerned here because, again, that is also sitting at applied volatility discount. It's 1 day, 29%. And it's got a crack in the short-term momentum signal. So if I pull that up here, what does that look like? I'll try to, get it in. Is that the stock price is now hitting that short-term momentum and going below it. So it does make me a little bit nervous in this market. So if you have a lot of gains this year, and let's say you pay taxes, one of the things that we do for clients is take a look at, is there a way to get cheap protection? So if nobody's buying protection, and I'm not saying do it on the SPY or the Qs, obviously you have to know your portfolio and what the types of securities you can have, what are all your objectives, your constraints. But if you want to be buying protection, this is a good time to be buying protection if you can find it cheap and other people aren't bidding that up. Similarly, Charlie, I don't remember if it was pre-show or during the show, was mentioning that he sold some calls on things that he had gotten a gain on. That's another way to do it. If people are very, very bullish and don't have protection, but keep buying they think that the market can only go up. There's a strong consumer, lots of narrative here. Then maybe you sell them a little bit of the upside. So there's different ways to play it. But I think that Charlie's on to something here, and you need to be risk managing your portfolio. Don't just set it away and go trick or treating today.
Well done, Nadine.
Got it. Well, a little bit of a bearish, more trick than treat today with our bearish outlook.
31st.
So, I want to thank everyone for joining us today at the Beats Roundtable. If you like what you heard today, you can find more at wallstreetbeats.com, where you'll find our real-time chat, transcripts, and more. I'm Berna Barchet. We'll be back tomorrow with more Wall Street Beats, and thanks again. Happy Halloween.
Thanks, folks.
Right.
Thanks.